Good morning. You're watching us here on Chartbusters. I'm Mangalam Malu, and with me Nigel D'Souza. As we speak, the market's looking, relatively stronger than what they were at the open itself. We opened with a cut, and from there we've seen a recovery of almost 100 odd points. The question is where we go from here. Nigel, we have seen all the dips being bought into, and this one is as well. There's not much juice for bears after a 200-point downtake.
Well, that's right, Mangalam. That was the call earlier this morning as well. If you're going to get a 200-point downtake, well, then risk-reward could favor buying into that dip. And for the time being, at least, that's worked out. But what's really worked out is the broader market trend. Even yesterday, though the Nifty was more or less flattish, the mid-cap index continues to power ahead. And as we speak as well, it's still up close to around 0.3%. Plenty to talk about. First up, let's run you through all the top stories at this point of time. It's a weak day of trade for Indian markets as global equity is correct. Indices, however, they move off the morning lows. The Nifty holds under the 17,500 mark. FMCG and pharma buck the weak trend. The mid-cap index trades in the green.
Defense stocks hold out in a weak market after Morgan Stanley raises target prices for defense players like BEL and HAL. Say the local defense production theme is as impactful as the government's PLI program.
A big block deal in Bharti Airtel sees nearly around 1.8% equity change hands at a price of close to around 750 rupees a share.
Coal India too bucks a falling market, bucks the trend in a falling market higher as JP Morgan upgrades its stock to an overweight rating with a target price of 285 rupees a piece.
And profit taking is seen in GM Pfaudler after strong guidance at yesterday's analyst meet. The company said it expects 25% compounded growth in EBITDA and 14% compounded growth in revenue for the next couple of fiscals.
Well, the space to be in this morning is definitely the broader markets. One sector that stands out is the cement space. So we're seeing big moves in the likes of Dalmia Bharat, JK Cement, of course, from the F&O space. But, even in the consumption space, we're doing some big moves. Shoppers Stops, for instance, did a good move in yesterday's trading session and now has moved to the high point of trade with a gain of about 6% odd. And specialty restaurants, that stock is up 148% in this year itself. And this morning up almost 9% odd. So broader markets are firing ahead even as the Nifty recovers from the lows. Sachidanand Uttekar joins in. Sachi, you had said that one would buy the dip. The dip has been bought. What are the levels that you're looking at now? At some point, do we see some resistance, or is there more juice on the way up from here?
Good morning, Mangalam. As you rightly said, yesterday we were expecting this particular dip, and the level of around 17,580 is very important. It is the 5-day exponential moving average, and so far for the last 5 trading sessions, we have seen Nifty hovering above this particular average very well. So even right now, the morning dips have been bought. The 17,500 support is significant, and we don't see any reasons of this particular support getting breached. So probably this is a good idea to start accumulating Nifty. Overall, we are expecting a rebound back to around 17,780 on a positional basis. If you look at the intraday trading range, I think the momentum on the higher side should be unlocked once Nifty starts trending above 17,620 from here on. So immediate basis, I think it's a good idea to accumulate longs. The stop loss for Nifty is placed at 17,480. The first target for the intraday is around 17,620. But positionally, we expect this particular swing to extend towards 17,780.
Okay, 17,700. Sachi, what about individual stocks? What's on your radar?
Good morning, Nigel. Nigel, clearly the theme for the day is, capital goods and cement. And when we look at cement, Ultratech Cement has already, been performing well. But if you look at the overall structure on the daily scale, we saw it rebounding from its 200-day exponential moving average. The clear-cut RSI crossover is indicating that there is still momentum which is valid. If you look at the 60 minutes data as well, we have observations of a broadening structure wherein the upper end is placed somewhere close to 68.70. So quite a lot of headroom still available on Ultratech Cement. Still, we recommend building fresh longs here. The stop loss for the trade should be placed at 66.60. And the intraday target is placed around 68.70. The second stock which has been on our radar is Crompton Greaves. If you look at the daily structure, there's a classic triangular formation. We have seen a fresh breakout from this particular formation. The pattern target is placed at around 440, but from a trading perspective, you can accumulate this particular counter for a target of around 425. The stop loss should be placed at 409.
All right, take that point. Crompton Consumer, there was a block trade also in there where a big seller has done a clean out trade. So maybe the supply overhang goes away, the stock at the high point of trade. Let's shift focus now to another stock which is doing well. It is an idea for profit coming in from our colleagues at Money Control Pro. Sachin Pal joins in with something that he's been tracking. Sachin.
The company is Polycab India, which is one of the leading manufacturers of wires and cables in the country. Performance of the business in Q1, which is the June quarter, was quite robust as the revenues grew by almost 48% year-on-year on a favorable base of last year. The operating margins, however, came in weak, primarily due to the inflationary cost pressures which has been impacting the wider industry. Besides this, the company is also facing certain challenges in terms of inventory destocking as its channel partner which has been caused by the volatility in copper and other metal prices. On the FMEG front, which is the consumer durables business of the company has witnessed strong growth. However, some categories have again been impacted by the inflationary market trends, and the same is likely to continue in the next 2 to 3 quarters. Nonetheless, the company is well positioned to emerge stronger from these headwinds and is market leaders in the wires and cables business and is looking to scale up the consumer durables as well in the next 3 to 4 years. Well, at around 30 times FY24 estimated earnings, investors should look forward to acquiring the stock on every correction with a long-term perspective.
Okay, all right, Sachin, thanks for that. Well, time to slip into a short break, but on the other side, we'll get in our first corporate. The chairman and MD of Rajratan Global Wires, Mr. Sunil Choudhary, joins us for a quick chat. Remember, the stock has been on fire in this year so far. Welcome back. Well, one stock that's really been on everyone's radar has been Rajratan Wires. Remember, it's a proxy play for the tyre industry. So if we're talking about tyre players doing well, I think you should just pull up the last 1 year chart of Rajratan Wires. The stock has moved from strength to strength because they make bead wires, which is an essential part which is used in tyre makers, and the cost is only around 3 to around 3.5% of the total cost of production of a tyre. To understand what's going on with the company, what's the outlook from here on, well, we are joined by the MD and CEO, Mr. Sunil Choudhary, who joins as the chairman as well as MD, joins us to detail all of that. Hi, Mr. Choudhary, congratulations. You know, your shareholders would be quite happy with regard to the stock price move, but we want to understand how is business panning out. So your current capacity, I think, is around 100,000 odd. You have capacity expansion that's coming on stream. That's your Thailand facility of around 20,000 tons. That's in the next month or so. For this year, what kind of a volume target that you have? And also your margins have been splendid, you know, in a very volatile commodity cycle. Operating leverage will play out. So what is the steady state margins you're looking at from here on?
Yeah, Nigel, we are in a niche product. We are in a difficult product which takes time to get approval, which takes time to learn the making right quality of product. So the growth, as I have been saying in earlier programs also, that we can continue to grow at 20% CAGR. Okay. So adding capacity won't mean that suddenly we will multiply the capacity. Okay. We have to keep the capacity ready. But yes, I am very confident of 20% CAGR growth in volume for next 4 to 5 years. And we are working on that plan.
So, and for this year, sir, what is the growth? 20% volume growth for FY23?
We did 90,000 tons last year. So, yes, we will grow by 20% in volume this year. There may be some, quarterly corrections because, there are some inventory corrections. Sometimes tire company takes a cut down in production.
Just going by what you had said in the past, Mr. Choudhary, you had said that this year you will do about 115,000 tons in terms of volumes, 50,000 coming in from Thailand, 65,000 coming in from India, and a revenue target of 1,200 crores with 19 to 20% margins. Is there any change to what you've said earlier?
No, I never said 115. We said 20%, so 90,000, add 20% to it, it can be close to 110.
Okay.
Okay. Out of which around 40, 42 will come from Thailand and balance will come from India. Yeah.
All right.
Because Thailand capacity will come on stream next month. So it will be available for balance 6 months.
So what about the capacity then? currently you have about 100,000 tons in terms of overall capacity. By the end of this year, where does your capacity stand at? What is the breakup between India and Thailand? And the year after that, you will have your Chennai plant as well, coming on stream. So what will the capacity then be?
Yeah, so our capacity now increasing. Thailand will become 60,000 tons, but this year we'll be able to do around 42,000 tons from our Thailand factory. We'll be able to comfortably do around 65 to 68,000 tons in our India capacity. Okay, and because India also has some black wire capacity, so I'm talking total volume from India. Thailand, Chennai will start some production by end of this financial year. So Chennai capacity will be available for next financial year. Okay. So next year we will increase some utilization in Thailand, and Chennai will start. So that should add to our sales.
Yeah, Chennai is going to add another 60,000 odd. In which year does it come on stream, Chennai?
So, as I said, the project will be completed by end of March this year.
Oh.
And capacity will be available for entire next financial year.
Okay, all right. And I think the total cost was around 300 crores, right? That will all be funded by internal accruals?
No, we have also availed 100 crores of term loan, but all this 300 crores will be invested in current financial year and next financial year.
All right, we take that point. So basically, ramping up of capacity, etc., should play out from next year onwards, where you will have a total of almost 180,000 tons in terms of overall capacity, 120 in India and 60 in Thailand itself. But you had also, mentioned that you are evaluating a manufacture of steel cords for tire makers. Is there an update on that? And is there any plan of diversifying into any other business vertical in the auto industry?
No, there is no plan to diversify. We are a focused company and we want to remain focused. Yes, steel cord is a product which also goes into tires, but technology is very difficult, and right now we are not able to find any technology partner. Okay, so no comments on that.
Okay, all right. Mr. Choudhary, you have been gaining market share. I recall when you were the market leader with the early 40%, that went to the late 40%. I think you're at 50% odd. A couple of, competitors in the market, Aarti Industries, if I'm not mistaken, the Aarti Group, Aradhya Group, a couple of them have had their own financial problems out there. So what is your updated market share? If you could give us a sense on that front. And a couple of these units, they were struggling. If they're put on the block, are you interested?
No, there is nothing on the block. There was one company which went into NCLT and it has been taken over by one of the companies, and they are starting to, starting production there. But we don't have any plan, and there is no more available in the market. And anyway, we would not like to buy any capacity. Okay, we will like to do our own projects, because we have done a lot of innovations, a lot of improvement in our technology, and we would like to grow with that technology.
And what about your updated market share?
Market share remains close to 50%.
Okay. And could you give us a sense of the way the market is poised right now? Back in the day, you did say that, while imports are about, the price difference between imports and domestic manufacturers is just about 5 to 10%. It is the logistics which make imports difficult. What is the share of the market right now domestically catered, and how much of that is imported? Can you give us a sense now?
Up to last quarter, around 15% was coming from, import, because logistic costs are also now coming down, but which is good for all the businesses. We are looking at exporting more from India. So our plan is to export at least 50% production from our Chennai factory. Chennai being a port location, we also think that India will remain competitive in raw material price. Rajratan will remain competitive in production price, and we are now working very hard, very seriously to explore market in Europe and more market share in Southeast Asia.
Okay, all right. Final question, Mr. Choudhary. For you, your margins are very important because there's a conversion that you're doing out there. Could you tell us in terms of EBITDA per ton or on a margin parameter, what can you hold out? I'm looking at your last quarter. You did close to around 21% of margins. What should be the margin outlook from here on?
It can be plus minus 2%, okay, which is okay. It can go down to 18, 19. It can go to 21. But I think we have done a lot of work in our internal working, in our production systems, okay. So majority of this improved margin comes because of our improvement in cost, okay. So we are sure of maintaining a good margin going down the line.
All right, and final one before we let you go, a quick one. EV, we understand the tires require an upgrade in the quality of the beads. Just wanted to understand, will you be able to meet that demand? Any additional capex required to meet the EV tire demand? And have you?
We are already suppliers to all the tires, including EV tires. Yes, companies are launching new tires for electric vehicles, but our wire goes well with those tires also.
And any new customer that you've added in the last couple of quarters?
I have been talking about Michelin.
Yes.
Michelin is an important customer in terms of quality, because getting approval from Michelin is a feather in the cap. Of course, the volumes are not very big, but it talks about the quality of product we make.
Mr. Choudhary, when does Michelin look at it? When is the review?
We got the approval and we have started supplying bulk volume to them.
Okay. All right. Always a pleasure talking to you, Mr. Choudhary. Thanks so much for stopping by and giving us your view on business. Good growth is what we're expecting. Margins to hold that vicinity of close to around 20% and sounding reasonably optimistic about business. For the time being, we'll slip into a short break. On the other side, we'll focus on the Chennai-based Murugappa Group. They've entered the EV market. You stay with us.
Welcome back. Cement stocks are on fire this morning. Shree Cement, the one which will exit the Nifty come September end, is now up 6%, and we have Ultratech Cement up around 3.5% as well. But the Murugappa Group down south has re-entered the EV business 14 years after the Chennai-based conglomerate first launched their electric scooters way back in 2008. The group company, Tube Investments, has now launched an electric three-wheeler under an all-new brand. The electric three-wheelers will be made by Tube Investments Clean Mobility, which is a subsidiary of the company, and will be sold under the brand name Montra Electric with a price range between 3.06 lakhs onwards. TI Clean Mobility's launch pipeline will comprise electric three-wheelers, tractors and trucks. In a rare exclusive, CNBC-TV18's Jude Saneth spoke with Tube Investment of India's chairman Arun Murugappan and KK Paul of TI Clean Mobility.
2008 it was where we went to electric scooters, and I think we were a little too early for the market itself. Yeah, and coming to it now after so many years, electric is the way forward, and we intend to go we formed this platform called TI Clean Mobility, and we probably have different platforms, starting with the three-wheeler, the tractor, and then the truck. So the first move, what I'm saying is like 2008 was a bit too early for us to do it. And now we're not getting into two-wheelers anymore because it's just too crowded a market to be in. So we will be in segments that will be productive segments like Paul said.
Right. I have to ask you then, what are the major learnings, Mr. Paul, that you think you can bring into this space really, considering it's less crowded, you will have a first mover advantage. You said you aim to be either one or two in the next couple of years. So what are the learnings and how do you plan on getting there?
I think the learnings are in terms of being fast to adopt. Number one, look at all the different solutions that are evolving. variabilizing the cost to the customer in a large way so that you provide those unique solutions. And therefore, what happens then is adoption becomes far higher for us and for the industry as a whole. And then we stand to gain there, having the first mover advantage.
Right. So cards on the table then, what is the kind of investment you're looking at as far as this space is concerned, this foray, and what kind of production capacities do you have and where do you go from here?
Yeah, so the initial outlay, we've put about 200 crores in this project. And our capacity today is about 75,000 units per year. Yeah? And any further capacity that when the time comes, we will invest and then go forward. Yeah.
But even as you contend with this space, there are some major global challenges that persist. For instance, the semiconductor issue. It's there's been talk that it could slow down EV production, as is Chinese control of lithium reserves and processing. Are these potential risks to your scale-up plans going forward, and how much will it impact you?
I think the risk mitigation plans are being drawn up, because on the semiconductor thing, we've got into strategic tie-up. Even with battery, we have got into strategic tie-up, looking at the volumes that we will have and a tie-up. The other thing also is that, the battery chemistries will slowly evolve away from rare earth materials to materials that are freely available. And the leading energy players will actually reposition this energy space that will make it far more easier to OEM manufacturers for adoption of battery technology and getting away from this crisis of, availability of materials actually.
So in that case, do you feel there's just been too much being read into the availability of lithium and in terms of the semiconductor issue as well? Or do you feel that things are kind of balanced where we are today?
See, today the things are stabilizing a little. Albeit with the war in Ukraine and all that, things became a little worse for semiconductors. But things are easing out a lot more as we see today. And, in the next 2 years at least, there are different battery chemistries that are evolving with the larger energy players. That will make the adoption much more easier, and that will make, the whole equation in the battery space, different from lithium specific only. It's going to be LFP, it's going to be hydrogen, it's going to be different other technologies that are going to help.
Well, the markets have slipped a little bit. We're still down close to under 100 points, but we have run out of time on Chartbusters. You stay with us. Trading Hour comes up next.